taking a look at gold against the 200-day moving average. The 200-day moving average, there's some good signs here. So right now, the 200-day moving average is at $1,845, and obviously the gold price has been using it as a point of support. Now, obviously, it's gone down below it from time to time, but it's a point of support for gold, and even going back down here to the March lows. And the fact that it's gone up to 1845, at this point, this time of this recording, is pretty good, given the fact that if you go all the way back to November, when we were worried about the initial death cross around that time, the moving average was at 1780. So it's made some significant gains since that point. And the fact that it's built this base so high up into the 1800s is a good sign. Now, obviously, things could always change with the gold price. Something crazy could happen, as far as fundamentals are concerned. But right now, things are looking pretty good for gold. But I will say that silver is looking a lot healthier. As you can see, it's not even touching the 200-day moving average. It's way above it. Its 200-day moving average is at $22.44. Back during its initial death cross, and around that time, it was around $20, the moving average. So it's made some significant gains all the way up to $22.44. And the price has not even gone down that low in a very long time as far as closing prices are concerned. Now, there's a reason why silver is performing a little bit better than gold right now. And obviously, it has to do with the U.S. economy. Now, U.S. economy speeds up at start of 2021 despite drag from pandemic. The IHS market shows. Now, they did a survey of the services and manufacturing sectors, and both sectors did extremely well in January relative to the prior month in December. Take a look at this. The index for services such as banks, hospitals, and retailers, by far the largest sector of the economy, rose to a 2-month high of 57.5 in January from 54.8 in the prior month. The index for the smaller but still sizable U.S. manufacturing sector, meanwhile, climbed to a record 59.1 from 57.1. So both sectors are looking pretty good. Obviously, they also go on to talk about how hiring has been an issue for both sectors, particularly with services. Now, one of the using a magnifying glass and looking more closely into what's going on within the U.S. manufacturing sector, you can take a look at the Mid-Atlantic. The Philly Fed survey did really well as far as taking a look at manufacturing within that region. It actually outperformed New York, and it jumped up to 26.5 from its December low of 9.1. And even though that seems like a huge jump, jumps like that happened May before. Take a look at this, going from 15 to 32.3 from September to October, going from 9.1 to 26.5, which is what we just saw, going from 17 to 36.7 from January 2020 to February 2020. So not too bad at all. So as far as manufacturing, the business sector, inflationary expectations are looking pretty good when it comes to manufacturing, looking pretty good for silver. Let's take a look at the National Housing Market Index. Now, the interesting thing about this is that since in 2020, we actually hit numbers that we have not hit before as far back as this graph goes, and it goes back into the late 80s. And in the year 2020, we hit highs that we hadn't hit before, obviously in a reaction whipsaw to what happened in March. So that's to be expected, but we're coming down from that high, and we're still looking pretty good relative to the highs from prior times. Now, it looks like we tend to oscillate around an average of 60 when it comes to this index, at least going back into the 90s. We tend to oscillate around that period of time, around that number, which is a good thing because we're still above that, and we are at 83, even though we've been coming down. And the sub-index of single-family homes was actually pretty interesting to take a look at, because we know that a lot of people were moving from apartments to single-family homes from the big cities to get away from high cost of living when everything was shut down. That decreased to 90 from 92 in December. And the gauge for home sales over the next 6 months went down to 83 from 85. But we'll see how things pan out, because I can imagine by summertime, that's a time when a lot of people are moving. They'd rather move during that time than during winter, but we'll see. But overall, this is a pretty good number relative to where we've been in the past. So as far as silver is concerned, with inflationary pressures from the, looking at the housing market, looking at manufacturing in the United States, even though the real economy is suffering right now, people, by the real economy, I mean, more specifically, employees are suffering right now. Even though employees are suffering right now, it looks like a lot of businesses and even the stock market, they're firing on all cylinders, well, as much as they can. Now, before we get to these points when gold and silver will rebound and spike, I want to leave you guys with one final story and one final message. Now, Great Falls, Montana, there was a woman who lost $50,000 worth of gold and silver from this man right here, 31-year-old Jesse Trent Cooper. He's in custody. They charged him with theft for possession of stolen property. Now, one of the things about this is that this guy just he broke into this woman's storage unit, and they caught him and even a witness trying to sell some of the metal. But the one thing you have to remember, guys, and this is just just something that I think everybody should take note of, is whenever you see a guy with blue hair, particularly when he's in his 30s and he has blue hair, just walk the opposite direction. If you have gold, walk in the opposite direction. But guys, I hope you enjoyed this episode. Please give it a like. Please subscribe if you're new. It's Black Bullion for goldandsilvertoday.com.